Hi, this is Lara at Elliott Wave Forex with a free US dollar index Elliott Wave analysis for you on Monday the 16th of August. A quick look at an historical chart going back to early 2007 or mid 2007. We had a 5 waves down to end a primary C to end a cycle degree B wave, 5 waves up for 1, ABC down for 2 at primary degree. We're within a primary third wave to the upside. This is all within a cycle degree C wave. So this is going to be a 5 wave structure at primary degree, and we've had 1, 2, and we're working on 3 to the upside now. A target for primary 3 to end may lie about 102.87, most likely. That's where it will equal 1.618, the length of this primary wave 1. Although it could go higher, we'll see how it unfolds and refine that target as we get closer. Taking you now to a daily chart just for the last year, where this black 1 and 2 is this black 1 and 2. And we see a clean breakout to the upside of this parallel trend channel drawn here around 2 black, a trend line from the start of A to the end of B and a parallel copy placed in the end of A. Pretty much contains this movement, a little throw over towards the end here, pretty common. And thereafter a pretty obvious trend change. We're in an upwards trend that's going to make new highs for the dollar and is likely to last several weeks if not a couple of months. Taking you now to, I had an alternate wave count on the daily chart level for you, and it's slightly different with this piece of labelling here and this piece of labelling here. It doesn't fit a trend channel, it fits a trend channel better, the ratios are slightly better, but here it is. It fits this trend channel better. We've got 1, 2, 3, 4, 5 for 1, followed by an expanded flat ABC for 2. It has a throw over in this 4th wave position, also pertains to a throw over in the 5th wave position. So it fits the trend channel better and it's got slightly better ratios, but the biggest problem I have with it, and the reason why I'm going to discard it today and not use it anymore at all, is because I cannot see a satisfactory subdivision within this piece of movement for this blue or minor wave 5. A simple counting of the waves sees we must have a 1, 2, and then within 3, 1, 2, and because this also 2 here would go into this one, this has to also be 1, 2, 3, 4, and I'm really happy to see this piece of movement here really should be labelled right in the middle of the 3rd wave, 3, 4, 5, 4, 5, and we're running out of room. There's no way that we can find a satisfactory 5 wave structure within this blue or minor wave 5 to meet all Elliott wave rules and many guidelines, but it just won't meet the rules. So for that reason I'm going to discard it. Here's the hourly chart just for the last 10 days, and here's the recent upwards movement from the dollar. I expected it was going to get a bit lower than this. It didn't, and it turned around right here at 80.09. Still, we were looking for that trend change. The end to black wave 2 came a little earlier than expected, but here it is. And now we're in a trend that's going to see the dollar moving up for the next several weeks, if not months. A short-term target for the next 24 hours or so, next 1 or 2 days, 83.48 to 83.61. 83.61 is where this orange wave 5, which began here, will reach equality with this orange wave 1. 83.48 is where orange wave 5 will reach 0.618, the length of this 3rd wave. Both reasonable expectations, so there's a short little target zone to the upside there for the dollar. This upwards movement is perfect textbook 5 wave impulse structure, beautifully contained in its trend channel. A trend line drawn from 1 to 3, parallel copy on 2, really nicely contains this little overshoot towards the end of the 3rd wave, a little overshoot in the 4th wave position. We may see an overshoot of this upper green trend line when it gets there in the 5th wave position. Some really nice ratios within this nice 5 wave structure here for 1 orange. Red wave 3 is a perfect 2.618, the length of this red wave 1, and red wave 5 just 0.06 more than 0.618, the length of this 3. Beautiful Fibonacci ratios in there. Also within this 3rd wave orange degree, red 3 here, just 0.24 short of 1.618, this length of this 1. And red 5, 0.08 short of 0.618, the length of this 3. Beautiful Fibonacci ratios in there as well. This upwards movement cannot be a 1, 2, 3, 4 because 4 would move into 1, therefore we're seeing an extended third wave. If this fifth wave extends and is quite long and maybe reaches above this target zone, perhaps it's as long as this third wave, then we may expect the second wave correction at green degree, which follows it, to correct somewhere around here, about just above 82.5. That would be a reasonable expectation if this fifth wave extends. It looks like the third wave within it is starting to extend here. When we've had a complete and satisfactory 5-wave structure up from this point upwards, expect to see a trend change back to the downside and a corrective second wave that technically at that stage can reach right down to 80.09. If you're not long in the dollar at this point, that second wave correction to the downside may provide an excellent entry opportunity, and will be in an overlapping 3-wave structure most likely, and that's coming up probably in a couple of weeks. So that's all from me with your dollar analysis, and I hope everyone had a really fabulous weekend.